What if your dream car could also serve as a strategic asset in your portfolio? Today we move beyond the usual debate and examine Ferrari and Lamborghini through a data-driven investment lens. Our research reveals a clear divide. Ferrari stands out as a stable, blue-chip investment, while Lamborghini offers a high-risk, high-reward growth profile. Consider this: one model from these brands appreciated more than 100% in just 3 years, while another lost value over the same period. We'll break down the numbers to help you see which brand aligns with your financial goals. To understand this divide, let's first look at how each brand commands its place in the market. Brand power in the luxury car world operates on two very different wavelengths. Ferrari's reputation is built on stability, heritage, and consistent performance, both on the track and in the market. With a brand value of $14.4 billion in 2025, Ferrari not only posted a 36% year-over-year growth, but also became the fastest-growing automotive brand, according to Brand Finance. This places Ferrari just outside the global top 10, outpacing mass-market giants and premium German automakers. Its market capitalization stands at $92.24 billion, ranking it fifth among all global automakers and ahead of names like BMW and Volkswagen. This financial strength is reinforced by Ferrari's AAA plus rating from Brand Finance, the highest possible, which quantifies its blue-chip status and signals a lower risk profile for investors. A large part of Ferrari's advantage comes from its racing heritage. Decades of success in Formula One have given the brand a unique authenticity and historical weight. The collector market responds to this with consistent demand for classic Ferraris. David Brynon of Gooding & Co. notes that top-tier Ferraris are outstanding blue-chip cars in all respects, emphasizing the value of rich history and expert restoration. For many collectors, vintage Ferraris, especially from the Enzo era, remain the gold standard, often forming the foundation of serious collections. Ferrari's approach is methodical. It connects racing pedigree, exclusivity, and meticulous brand curation, all of which underpin its long-term appeal and investment stability. Lamborghini, on the other hand, takes a very different approach. The brand does not appear in Brand Finance's top 15 auto brands, underscoring its smaller financial footprint and the realities of being a subsidiary within the Volkswagen Group. Yet, Lamborghini commands momentum by capturing the imagination of a younger, more diverse audience. In 2023, Hagerty reported that 85% of Lamborghini insurance quotes came from Gen X and younger enthusiasts, compared to 66% for Ferrari. This demographic shift is significant. Lamborghini's appeal is rooted in its bold, futuristic design language and its reputation as a rebellious alternative to traditional luxury. The company's history, born from Ferruccio Lamborghini's rivalry with Enzo Ferrari, has always favoured dramatic gestures over rational planning. Stephen Bailey summarised it as Ferrari is a religion with a business plan. Lamborghini, by contrast, was a dramatic and beautiful gesture, not a rational plan. Early Lamborghinis were often dismissed as theatrical and beautiful but flawed, but that perception has shifted. Today, models like the Miura and Countach are celebrated as automotive art, with values that reflect their cultural impact as much as their engineering. Lamborghini's strategy resonates with younger buyers who prioritize distinctive design and a break from convention, driving short-term value spikes in the collector market. Ferrari's public structure and disciplined market strategy deliver stability that appeals to long-term investors seeking reliable wealth preservation. Lamborghini, as a subsidiary, operates under the strategic direction of a larger conglomerate, which limits its autonomy and makes its value more sensitive to broader corporate decisions. This dynamic leads to more pronounced fluctuations in Lamborghini's market performance, but also enables explosive growth when the brand's momentum aligns with shifting tastes. But does brand power translate into real cash returns? The relationship between scarcity and supply is central to understanding how limited models shape value for Ferrari and Lamborghini. Each brand's production strategy directly impacts investment results, offering a clear contrast in how exclusivity and availability influence asset performance. Lamborghini's approach leans heavily on limited edition releases to create immediate value spikes. The Aventador SVJ stands out as a prime example. With only 900 units produced and an original MSRP of $517,770, the SVJ's market trajectory highlights the power of scarcity. Recent sales data show an average resale value of around $890,000, representing a gain of approximately 72% over its original price. This appreciation is not an outlier. It demonstrates how tightly controlled production can transform a new car into a sought-after asset in just a few years. The 2024 RM Sotheby's auction, where a 2020 SVJ Roadster sold for $797,500, underscores this trend and reinforces Lamborghini's reputation for monetizing exclusivity. Ferrari, by contrast, relies on series production models to meet consistent global demand, which shapes a different investment profile. The Ferrari 812 Superfast, with an MSRP between $335,000 and $350,000, illustrates this point. Over the first 3 years, the 812 experienced a depreciation of about 18%. Market analysis from 2024 to 2025 indicates a further year-over-year decline of around 9%, reflecting a cooling market after the post-pandemic surge. While some low-mileage examples from 2019-2020 have held their value relatively well, the overall trend is clear. The 812 Superfast is fundamentally a depreciating asset, in contrast to the short-term gains seen with Lamborghini's limited models. Ferrari's strategy does allow for exceptions, especially when demand temporarily outpaces supply. The 296 GTB, a series production model, has shown strong value retention in its first 2 years, with low-mileage examples from 2023 to 2024 often listed between $350,000 and $390,000. This premium is largely driven by long waiting lists and high initial demand, but it remains the exception rather than the rule. Unlike Lamborghini, Ferrari's brief forays into scarcity-driven appreciation are less volatile and less frequent, reflecting the brand's focus on long-term stability. The impact of production volume becomes even more apparent when comparing classic models. The Ferrari Testarossa, produced in significant numbers, about 10,000 units, has an average market value today of around $135,000. In contrast, the Lamborghini Countach, with just 1,983 units built, commands an average price of $611,447. Rarer variants like the Periscopio LP400 approach $900,000. This 5-to-1 production ratio is the primary driver behind the Countach's superior long-term value performance, highlighting how scarcity can underpin sustained appreciation. However, exclusivity alone does not guarantee financial success. While limited production can drive dramatic short-term gains, it also introduces volatility and unpredictability. Not every rare Lamborghini achieves the cult status or enduring demand of the Miura or Countach. Some models with less cultural resonance have underperformed in the secondary market. Ferrari's broader, more consistent production strategy provides steady demand and investor confidence, supporting gradual, reliable value retention across its lineup. Ultimately, scarcity offers opportunities for high-reward, high-risk plays, especially for those who can time the market. Ferrari's disciplined approach favors stable, long-term value, with occasional peaks when supply and demand briefly align. For investors, this presents a clear decision point. Pursue Lamborghini's explosive, scarcity-driven returns or Ferrari's steady, blue-chip performance. Yet production numbers are only part of the equation. The ongoing costs of ownership can have a significant impact on a car's true investment return. Understanding these hidden expenses is critical before making any decision between these two marques. Factoring in the ongoing expenses of ownership is essential when evaluating the investment case for Ferrari and Lamborghini. Maintenance and long-term service costs can quietly erode the gains from appreciation, and the differences between the two brands are significant. Ferrari separates itself with a 7-year complimentary genuine maintenance program, standard on all new models since 2012. This program covers all scheduled services, including annual fluid and filter changes, belts and spark plugs, and is fully transferable to subsequent owners. The value of this benefit is substantial. Over 7 years, owners save an estimated $15,000 to $20,000 in routine maintenance costs. For investors, this not only lowers the total cost of ownership, but also enhances resale value, since a pre-owned Ferrari with years of factory-backed service remaining is a more attractive asset. Owners frequently report that this program delivers genuine peace of mind, reducing anxiety about unexpected service bills and making the ownership experience more appealing. Lamborghini, in contrast, does not offer a comparable complementary maintenance plan. For models such as the Huracan Technica, annual service at an independent specialist averages around $1,200, but dealer pricing can be significantly higher. Major service intervals, such as those required every 5 years, can run up to $6,000. Over a typical 7-year period, Lamborghini owners face much higher out-of-pocket maintenance expenses than Ferrari owners do during the same window. These predictable, recurring costs can cut into the returns from even the most successful Lamborghini investments, especially when considering models purchased as speculative assets. Non-routine repairs further widen the ownership cost gap. Both Ferrari and Lamborghini use advanced technology and high-performance components, which means that major repairs are expensive regardless of brand. Dual-clutch transmissions, now standard on models like the Ferrari 296 GTB and Lamborghini Huracan Technica, offer exceptional performance but come with high replacement costs. For the Ferrari 296 GTB, the clutch housing alone is priced at over $5,500, with full replacements only required outside the complimentary maintenance period. Lamborghini's Huracan clutch assembly costs over $4,100 for the part, and total replacement, including labor, often exceeds $15,000. Owners of both brands need to be prepared for these expenses, but the timing is different. Ferrari's program defers these costs, while Lamborghini owners encounter them sooner and more regularly. This difference shapes the risk profile of each brand as an investment. After Ferrari's 7-year program ends, annual maintenance for a modern V8 model like the F8 Tributo averages about $2,800 at a dealer. This remains relatively manageable compared to Lamborghini's ongoing costs, which are higher even in earlier years of ownership. For investors, these cost structures matter. Ferrari's predictable factory-backed maintenance aligns with its reputation as a stable, low-risk asset for long-term wealth preservation. Lamborghini's higher, less predictable costs reinforce its profile as a high-risk, high-reward play, where timing and market sentiment play a decisive role. Hidden maintenance costs also impact classic models, not just new purchases. What happens when these costs eat into your returns? We'll uncover that with our classic model ROI battle. Choosing between Ferrari and Lamborghini comes down to defining your investment approach. The Knight Frank Luxury Investment Index shows collectible cars have appreciated 116% over the past decade, confirming their role as a legitimate asset class. Within that, the historical ROI numbers speak for themselves. Over 10 years, the Ferrari Testarossa nearly doubled in value, while the Lamborghini Countach climbed about 61%. Ferrari offers stability for those prioritizing wealth preservation, while Lamborghini appeals to investors seeking higher risk and potential reward through market timing. Consider how these two distinct luxury investments align with your financial goals and risk profile. Let us know in the comments which brand fits your strategy, and subscribe for more data-driven analysis on building your luxury asset portfolio.